Good morning on your side, and good evening. Evening over on my side. 10 past 5. So right now, my co-worker. Right now we're currently in London Market Open here, and seeing quite a bit of a move. I actually wanted to get involved in this move. Yesterday, today won't be long. Today won't be a long video. No, I promise you that it won't. I've got cervical headache pain from left side of my neck, and I feel it in my temple. Left temple right now. Panadol, trying to do something with. And using Voltaren gel, muscle relaxing, and drinking water, and using heat packs. So trying to push through this headache. I have a headache, and and it's cervical headaches can be that painful. You just have to stop what you're doing. And I wanted to push through and do a video for you today, because yesterday was a public holiday. So today I wasn't going to get this out, but I would like to push through and get something out to you today. I was trying to get involved in this move, and I wanted a risk to reward that would be in my favor here, of course, because we want to stay within our risk to reward that gives us over a 1-to-1 to keep our positive expectancy with the strategy that we are trading. Last month, so April finished, and we did 284 pips. Okay, 284 pips for April. March, may as well just update you. March we did minus 97, right? And March was, it started off really good. That month was really good. And then at the end of it, the market said, I'm going to take that. And ended March in the red. Yeah, so April, last month, 284 pips, okay? My win percentage was about 46%. Missed out on a ton of trades. Oh, that does happen. That does happen in trading. You try and get everything that you can, of course, trading your window. But that really hurt. I missed out on about, I was going to say 300 and something pips, which is actually about right. With trend continuation, trade, and patterns, but let's just say extra 200 pips didn't get added for April, and that's going to happen. When it does happen to you, it sucks, and there's not much that you can do about it except moving forward and continuing to trade what you currently got. Yeah, quite a few trades in here. 46% win percentage. Let's go over, let's have a look actually. So BAT pattern did well, Cypher did well, Gartley not so great, and trend continuation trade did well too. Okay. Yeah, I just wanted to update you really quickly with that. And then we'll see how we go with this month. So this month, was it May? Yeah, I tried to get involved in this. We didn't come all the way down to give us that good risk to reward here. So what we need to do is your limit orders right here. So trying to get a trend continuation trade, because clearly we are bearish, not were. We are bearish. We have a move up, pullback, new structure high. Remember from the Star Classroom videos, okay, the lessons that we did, we had a pullback here. So have a short shy, pull back there, and then price action, bang, we get a move towards the upside here. So I want to get involved with my trend continuation trade on the euro yen. 15 minute, I want to get involved, but I need a pullback all the way back down into structure. Remember, this is our previous resistance, okay? And I also, if you haven't watched it, I also mentioned that the market is imperfect, okay? That means we can be just shy of it and miss out. So we come all the way down, just shy of it, because I want my entries down here for my good risk to reward. Bang, we get a move to the upside. Previous resistance was new support. So then we get a move towards the upside here. The same thing, or same approach rather, is what I want to go for. So I want to so I get rid of this and drop in a line tool right here on the euro yen. So I'm looking for a pullback, okay? And I want to get involved towards the upside with this. So see how this goes. With this kind of movement, I was looking at, yeah, so this is what I'm going to pay attention to today. Dollar yen. Yeah, so I can't get involved in this one either. So this is dollar yen 15 minute, similar trade setup here. So looking for price action to pull back, and I wanted to get long here, right there. And I can't now because remember, we've already come up and hit target. Like this is the spot that I wanted to get out of the position. We've already pulled back into structure looking left. You see previous resistance, now new support. We've already come back down into that, and then boom, we've come up into target. So these aren't missed trades. They aren't missed trades exactly because I can't get involved in it anyway, unless price action comes all the way down here. So if we did get a move all the way down here, just a little bit further below this level right here, then I can have a really good risk to reward setup, okay? But we don't. So now what I need to do is wait for a similar setup and get rid of my orders here, by the way. 2 contracts, 2 positions, so get rid of 2 orders. What I need to do now is wait for price action to close above this high right here. And if we do, we can pull back and then look for the similar setup here, of course. Or get rid of that. Or we might not break above these highs or move past above these highs. Might come all the way down into an 886 if that's what happens. Then I'll be looking to buy at the 886 with a BAT pattern trade right here. Again, this was dollar yen 15-minute time frame. So if we use the if then syntax and price action moves all the way down into our buy zone. If price action moves all the way down into our buy zone, then I can look to buy this up. So at first I wanted a trend continuation trade, not going to get that. Already retest the highs here, looking left. So now I want my next setup. If we get price action move down into the 886, then I want to look for a buying opportunity there. Okay, I think that's about it actually. I knew there was something else, so I'm back. Aussie yen for our time frame. This is a great trend continuation trade right here. So got a big move like this, okay? Now, within this move here, you have a AB equals CD. So this is a complex pullback, right? And this sets up a BAT pattern entry right here. And now you might say, but Phil, you said this is a trend continuation trade. Well, it can be, right? If you have a BAT pattern trade, so you have a pattern trade set up right here, which completes down at the 886. This is your buy zone down here. And you have a risk of about 80 pips. And this sets up a textbook trend continuation trade towards the upside with a complex pullback. You can go out and test these things. And if it does provide you a positive expectancy, these kinds of setups can be extremely rewarding. This kind of setup can be extremely rewarding for you because now you have an 80 pip risk in a trend continuation trade, but you're using the BAT pattern as a case for entry. Because one of the trickiest things when it comes to trading and having a positive expectancy is knowing your entries, stops, and targets. Knowing those on a consistent basis that provides you a positive expectancy. These are things that you want to go and test. Those are the strategies that you need to know your numbers around. Because if you do, what you see in front of you can be extremely rewarding for you, right? So we have 80 pip worth of risk, and then you have a trend continuation trade. So retest of the highs, okay? Retest of the highs right here, because that is what we want to do with a trend continuation trade. 80 pip worth of risk, your entries at the 886. And your first target is, let's say, 210 pips for target 1. And then target 2, Fibonacci extension, swing low to swing high, back down in. And we're just blasting, continuing towards the upside here. On the Aussie yen, this is 4-hour time frame. And then target 2, that would have been 340 pips with a risk of 80 pips. Because again, it's not about how much money I'm going to make on this move. It's how much am I going to risk? And if you can keep your risk small relative to the reward that you are going to get, that positive expectancy for you on a consistent basis is insane. Like that's the secret. All you need to do is test that. And if it works for you, go and trade that consistently. And you can set up these kinds of things. And they are insane. That would have been a spectacular trade on the Aussie yen for our time frame. But yeah, we don't get the opportunity because I wasn't around when price action was in the buy zone. This is something most definitely want to get involved with. And then the other one, so lastly, going on about 14 minutes. Last I want to look at for the trade of the day here is Kiwi dollar 4-hour time frame. My entries are resting here at the 886. Make sure that's make sure fix that up. Right there. So this is my sell zone. Swing high to swing low down here. Pull back into the 382. And then CD completion right here. Everyone knows what this is. 886 CD completion. So this puts us on BAT pattern alert. And now I just want to watch this as well. For my entries at 62.070s. So I have my stop in the wrong place actually. Move that down to 375 like this. And Fibonacci retracement, swing low to swing high, assuming that this is where price action most likely to reverse. And then I'm looking for a move down into the 382. target 1, and then all the way down into the 618 for target 2. So 1 to 1 right there. Yeah, 382 and 618. And this is my BAT pattern on the Kiwi dollar 4-hour time frame. Okay. So about 30 pips of risk. Is that right? Yeah, 30 pips of risk, 31 for target 1 and 54 for target 2. All right. That is my updates for today. As I said, I really wanted to get something out for you today, and I've been receiving a lot of support, and I wholeheartedly want to thank you so much for that. If you do find this kind of material valuable, do remember that you can hit the link in the description and sign up for the free classroom that I have to find training on how you can go out and do this for yourself as well. All right. Until tomorrow, be safe, enjoy life, and good luck in the markets, and I'll talk to you soon. Thank you so much.